Welcome back to Return My Capital. Today we're going to take a look at the 11 stock sectors that actually make up the S&P 500, the US markets. For a little backstory here, back in 1999, the S&P Dow Jones and MSCI indices actually got together and created something called the Global Industry Classification Standards or standard. And that's what actually made up the original 10 sectors of the stock market. And those were energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials, information technology, telecommunication services, and utilities. And then in 2016, real estate was carved out from financials, so REITs, so making it now 11 sectors. So those are the current 11 sectors we have today. In 2018, the telecommunications sector was renamed communication services. So those are the 11 sectors. We're going to take a look at each of them and see what actually makes up the S&P 500. And furthermore, whether it makes sense to invest in a specific sector, and then potentially where there may be companies where it doesn't make sense to with the sector that they are currently assigned. So looking here at VOO, which is a Vanguard S&P 500 ETF, certainly there are similar products from iShares and Spider, but VOO, you see expense ratio of 0.03%, can't really beat that, and a dividend yield of 1.4%. Now, if we look at the breakdown of the S&P 500, you'll see the 11 sectors here up top. You'll see the top holdings. From a sector perspective, technology now makes up 32% of the S&P 500, followed by financials at 14%, healthcare at nearly 11%, consumer cyclical, also known as consumer discretionary at nearly 11%, 10.5%. You've got communication at 9.5%, industrials over 7%, consumer defensive or consumer staples just below 6%. Energy at 3.3%, utilities 2.5%, real estate just over 2%, and materials just under 2%. Of the individual holdings that make up the S&P 500 or VOO, you see the individual weightings there. Now, 509 holdings. I know it's called the S&P 500, but companies are included, removed. In the case of a company like Alphabet or Google, there are actually two share classes. So that's why it's not exactly 500. But of those 500, the top 10 holdings, or really here, the top 9 holdings, actually make up 35% of the entire index, which is significantly more concentrated than you typically see, but that's simply because of the performance of the mega cap tech stocks over recent history. So you've got Apple followed by NVIDIA. Kind of interesting to actually see NVIDIA, the second largest cap-weighted company now over Microsoft. But then Microsoft, Amazon, Meta, really Alphabet would be larger than Meta, but you've got the two different share classes. You've got Berkshire Hathaway, now just under 2% of the S&P 500, Broadcom, and Tesla. So that rounds out the top 10 individual holdings. But again, we're going to look at the sectors themselves. So here we're taking a look at VDE, which is the Vanguard Energy Sector ETF. The top 10 holdings that are energy focused would be Exxon, Chevron. Those are the two holdings with double-digit cap weighting. So Exxon at 23%, Chevron at 14%, ConocoPhillips at 6.5%, EOG Resources 3.5%, Williams Companies, not familiar with them, but they're at 3.5%. OneOK or Oniak, not really sure, they're at 3%. Schlumberger at 3%. Kinder Morgan, KMI at 2.77%, followed closely by Phillips 66 at 2.76%, and then Cheniere Energy. So 115 holdings in VDE here, which again is the energy-focused ETF. 115 holdings, the top 10 do make up 65% weighting for this sector. Next sector would be VNQ, which is the Vanguard Real Estate Index Fund ETF. You'll see a expense ratio of 0.13%. I'm actually going to pull all these up and take a look at them. This is the only sector-specific ETF from Vanguard that doesn't have a 0.09 expense ratio. So slightly higher expense ratio for the REIT, the real estate sector ETF. It does have a 4.26% dividend yield. Of the holdings, the top 10 would be, this is a proprietary product from Vanguard, but of the individual companies, Prologis is the largest REIT, a big time warehouse REIT. as companies like Amazon and other e-commerce giants need more and more distribution and warehouse space, Prologis is a large real estate owner of those properties and facilities. So 6.5% for Prologis, American Tower Corp 5.4%, Welltower 5.25%, Equinix, I believe that's a healthcare REIT, just under 5%. Simon Property Group, 3.4%. That's your mall REIT. So who knows about the future there. You've got Digital Realty Trust, 2.9%. I believe data centers. Realty Income, ticker symbol O, the monthly dividend payer. Don't need to remind anyone of that, but 2.8% for Realty Income. Public Storage, 2.7%. And then the 10th holding being CBRE Group, not familiar with them, at 2.4%. So 162 total holdings for the real estate sector ETF. Top 10 holdings make up 50% of that index. Moving on, we've got the Vanguard Healthcare ETF sector. VHT is the symbol, 0.09 expense ratio and a 1.6% dividend yield. You've got Eli Lilly at 12%, UNH, United Health Group at 7%, AbbVie 5.4%, J&J 4.75%, Abbott Labs, the company that AbbVie was actually spun out from, at 3.85%. You've got Merck at 3.5, Intuitive Surgical 3.3, Thermo Fisher Scientific 3.25%. Amgen at 2.6, almost 2.7%, and then Boston Scientific at 2.5%. 416 holdings in VHT here, so actually a significant amount of holdings for a sector-specific ETF. The top 10 holdings do make up 48%, so almost half from the top 10 holdings. In the communication services sector, ticker symbol VOX from Vanguard, again, 0.09 expense ratio and a 1.2% yield. This one is extremely overweight, the top couple holdings. So you'll see Meta up there at 20, almost 22%. Alphabet, if you combine the two share classes, almost 24, but 23%, or excuse me, almost 22, but 21%. You've got Disney at under 5%, AT&T under 5%, Netflix. Let's see, with Netflix, you've got 4.4% of Netflix. Interesting that AT&T and Disney are still larger than Netflix. I wouldn't anticipate that to continue. Verizon underneath Netflix there at 4.2%. T-Mobile climbing up to 3.5%, followed by Comcast at 3.3% and Take-Two Interactive at 1.5%. 120 holdings in VOX here, the communication services index or sector, and the top 10 holdings, again, very heavily weighted towards the top couple holdings. The top 10 make up 70% of communication services, and really it's Google and Meta, or I should say Alphabet and Meta. The Vanguard Consumer Discretionary Index, so consumer discretionary sector, 0.09% expense ratio and a under 1% yield. You'll see why when we take a look at the holdings that make up this sector. Top holding is Amazon at over 22%, followed by Tesla at 13.5%. So not big dividend payers there. You've got Home Depot at 6.5%, followed by McDonald's at 3.5%. Booking Holdings, it's really climbing up there, almost 3% for Booking Holdings. TJX companies, 2.3%. Lowe's, just over 2%. Starbucks, that's really been falling off, just over 2%. Mercado Libre, a little over 1.5%. I believe that's the Amazon equivalent in South America. And then Nike at 1.59%, as that one's been dropping like a rock. So 296 individual companies that make up the Vanguard consumer discretionary sector. Top 10 holdings, 59%, let's say. So a little over half of the entire sector in the top 10. For the consumer staples, you're looking again at a 0.09% expense ratio and a 2.4% yield. So these will be more of your everyday goods that you would see in your home, your staples, the ones that theoretically you can't live without. Top holding for the consumer staples is Costco at 13%, Walmart at 12.25%, Procter & Gamble 11.3%, Coca-Cola 7.5%, PepsiCo a little over 4.5%. Philip Morris, the big tobacco cigarette, nicotine, whatever company. 4.6% Altria, very similar to Philip Morris. I think Altria was spun off from Philip Morris. Correct me if I'm wrong on that, but Altria 3.1%, Mondelez International, uh, spirits, beer, wine. They make up 2.8%, Colgate Palmolive 2.35%, and Target 1.9% as they've been beaten down. So these are the consumer staples, 106 total holdings in VDC here. Top 10 holdings make up 64%. Moving along to the financials, we've got the Vanguard Financials Index Fund ETF, VFH, a just under 2% yield for the financials here. Top holding is JP Morgan at 9%, followed by Berkshire Hathaway at 8.2%, MasterCard 5.7%, Visa 4.7%, Bank of America 3.8%, Wells Fargo 3.1%, Goldman Sachs 2.4%, American Express 2%, as well as S&P Global at 2% and Progressive at 2%. So the financials, 409 companies, so a fairly large amount of holdings for one sector, a lot of regional banks, a lot of insurance providers. So top 10 holdings make up 43% of the financial sector. We've got the industrials. Top holding is GE Aerospace. GE did go through a breakup recently of a couple different branches of the company, but you see here with the industrials, almost 400 holdings, and the weighting of the top 10 holdings only makes up 27.5%, so a lot more diversified index or sector rather than some of the others we've already taken a look at. In the number 2 place, you've got RTX Corp, formerly Raytheon, 3.25%, Caterpillar at 3%, Union Pacific at 2.75%, Uber at 2.65%. Uber's a very good example, and we'll talk about a couple others at the end of this video, of companies that may not make sense with the sector that they're actually classified in, but certainly I would argue that Uber does not belong in the industrial sector. Honeywell at 2.5%, Boeing 2.4%, ADP 2.36%. I think ADP is technically classified as an information technology company. If it's not, it certainly should be. Deere at 2.3%, and then Eaton at 2.1%. So again, top 10 holdings of the industrials sector ETF here, just 27.5%. So a lot more diversified than some of the other sector specific ETFs we've looked at. The Vanguard IT sector, 0.09% expense ratio, and just a 0.6% yield, as you would expect from tech companies. Top holding is Apple at almost 18%, NVIDIA 15%, Microsoft 13%. So really those top 3 are extremely overweight due to their size. So, I mean, it makes sense, but Broadcom, a little over 4%, Salesforce 1.8%, Oracle 1.7%, Cisco 1.6%, IBM 1.5%, Accenture 1.4%, and then Adobe 1.2%. So 317 companies within the IT sector here, tracked by Vanguard. Top 10 holdings make up 60%, and really it's these top 3 of Apple, NVIDIA, and Microsoft that carry such a large weighting for just those 3. 2 more sectors to take a look at. We've got the materials sector. And if you remember from when we looked at the S&P 500, this is actually the smallest sector of the 11, under 2% in the entire S&P 500. They do provide a nearly 2% dividend yield as a sector. Top 10 holdings, we've got Linde at 16.5%. So this one company makes up over 16% of this entire sector. Then we've got Sherwin-Williams at 6.4%, Air Products and Chemicals, I believe APD is the ticker symbol, 5%, CRH at 5%, Ecolab 5% as well, Freeport McMoran, I've never heard of that one, 4%, Newmont 3.5%, Corteva 3.2%. I believe they used to be a part of Dow, as well as the next one, Dow DuPont. I believe Dow split up into Dow DuPont, and Corteva. I think Corteva is the fertilizer producer, but I could be wrong on that. And then the 10th of the top 10 is Vulcan at 2.4%. So 120 holdings in material sector here, 54% weighting of the top 10 companies. And the last sector being the utilities. I think this is the second smallest. No, it's actually the third smallest in the S&P 500. So the smallest being materials, then REITs, and then utilities. So utilities, a little over 2.5% of the S&P 500. You do get an over 3% yield on this sector. Top holding is NextEra Energy. NE is the ticker symbol. 11% weighting, followed by Southern at 7.5%, Duke at nearly 7%, Constellation Energy at 6%, American Electric Power, AEP, at 4.25%, Vistra at almost 3.5%, Sempra almost 3.5%, Exelon at 3.3%, Dominion at 3.2%, and then Xcel Energy at 3.1%. 72 holdings in the utility sector, at least tracked by this ETF. And the top 10 carry a total weighting of a little over half, 52% of the entire sector. Here you're seeing the 11 sector-specific ETFs compared to each other. Again, as I mentioned, all 11 carry a 0.09% expense ratio from Vanguard, with the exception of the utilities being VNQ at 0.13%. You see the AUM, the addressable market there of the sectors, VU at 1.3 trillion, far and away the most assets under management, followed by the IT specific ETF at 88 billion. A little bit of performance over the 1 year, VU at 7% for the past year. You'll see VDE here, the energy specific ETF, down 17%, really getting beat up. What else is standing out on the 1 year? Financials up almost 18%, and utilities up 22.5%, which is pretty incredible performance for the utilities. So those are a couple of the sectors outperforming the S&P 500 over the past year. On the 3 year, VU's up a little over 23%. Energy slightly negative, real estate down almost 21%. So not very good performance over the past 3 years for the REITs. You'll see the communication services up almost 24%, so slightly outperforming the S&P 500. Financials about even, as well as industrials. And then you'll see the information technology sector ETF, the highest performer at 37.5% on the 3 year. On the 5 year, S&P 500 at 95% performance. This is where you see the standout performance from VDE, the energy sector, really as it bottomed out during the 2020-21 time. So 161% performance from that bottoming out. Communication services, 73%, so slightly underperforming the S&P 500. Consumer discretionary, about even with the S&P. Staples, about half the performance. Financials, slightly outperforming. Industrials outperforming, and the top performer again being information technology at 130%. Lastly, we'll look at the past decade. On the 10-year, S&P 500, 156%. Energy slightly negative, real estate slightly positive. So not great performance on the 10-year for those two sectors. Consumer discretionary, about even with the S&P 500, just under 150%. Consumer staples, about half that. Financials slightly underperforming the S&P. Let's see. The information technology, by far and away, the highest performer at 381%. And utilities here, about half the performance. So that's the little dive through the various 11 sectors. I did mention that there are a couple companies where assigning a specific sector of the 11 might not make a whole lot of sense. We already talked about Uber being an industrial. I don't think that makes a whole lot of sense. Certainly, I would argue that that should be either consumer discretionary or information technology. If you consider a company like Amazon, again, that's currently considered a consumer discretionary stock. But if you think about the underlying elements that make up Amazon's business, you've got AWS, which is the cloud computing aspect of Amazon. That alone is 60% of Amazon's income, at least in 2024 it was, and that's only expected to grow far more than the growth that you're seeing from the e-commerce aspect of Amazon's business. So e-commerce from Amazon, 70% of revenue, but when you look at operating income, 60% of that is coming from AWS. So I would certainly make the argument that Amazon should be in the information technology sector. Company like Tesla, yes, again, currently in the consumer discretionary sector. But with Tesla, certainly the fastest growing aspect of its business would be the energy storage business. You look at some of the future initiatives, everything from the battery storage to AI to autonomous driving, strong arguments to be made there that it could potentially be in the energy sector if the energy storage business and battery business continues to grow there, or if AI becomes more and more prominent with the autonomous driving aspect of Tesla's business. Well, then maybe it needs to be in the information technology sector. Companies like Visa and MasterCard, yes, they're financial sector currently, but really, when you look at what makes their business as strong as it is, it's the information technology aspect of it, that all of the processing is riding on the infrastructure, the rails that Visa and MasterCard provide for that are enabling that worldwide scale and aspect of their business. So yes, their infrastructure is enabling financial processing, but it's really the information technology aspect of their businesses that make them who they are. Berkshire Hathaway, currently classified a financial, yes, the base model of their business is being a insurance provider, but since it's such a conglomerate, they have massive holdings in railroads, which would be classified as an industrial. They've got consumer staples, some consumer discretionary holdings. They own a significant amount of energy companies. And then their largest single holding is famously their investment into Apple. I believe at one point it made up 43% of their total holdings. And well, obviously, Apple is an information technology company. So the sectors are tough when you look at a conglomerate like Berkshire Hathaway. And then I'll finish here on Alphabet and Meta. Currently, we looked at the communication services sector. Those are by far and away the companies that make up the majority of that sector from a market cap weighting perspective. And inherently, it makes sense because they get a lot of their revenue from advertisements and marketing. But intuitively, you would think that a company like Alphabet, Google, and Meta would be a part of the information technology sector. So just a little food for thought if you're considering investing into a sector-specific ETF. As you saw with the charting and the performance over the 1, 3, 5, and 10 year, obviously no guarantee of future performance, but it's not too common for a sector to individually outperform the S&P 500. We've seen it with information technology. Who knows if that'll continue into the future, but just a little food for thought. Hope you enjoyed it. Hope you learned something. Thank you for watching. Take care. Bye-bye.